Good morning, everyone. Jesse Webb, TradersPro. We're had a pretty decent looking reversal bar yesterday, right around this resistance zone on SPY, and you can see this rally where we opened, rallied higher, and then closed all the way back down again, creating that bearish hammer pattern. This bearish candlestick hammer pattern right at a resistance location. That's pretty significant. Looks like futures are down today a little bit, so we'll see if we get any follow through on that. We are seeing a few bullish internals, which it's just creating, we're just creating all kinds of kind of a different indicator, different perspectives on the market right now, which are conflicting, and that's okay. But our overall bias here, we want to still consider this overall downtrend, this overall bear market. We definitely are been bottoming and kind of flattening around for the last 6 months now. And one of the things that has shifted, we're back to mildly bullish. Again, this can go back between bullish and bearish and mildly bearish. It's bumped up to mildly bullish, which is really the next step before bullish, which is essentially a new green bar on SPY. But we'll see what this reversal happens today, because as I mentioned before, this sentiment, when sentiment is really good like this and everyone's expecting the markets to go higher, that's often why they don't. So we'll still continue to follow this price trend. This is kind of our wedge pattern now that's created on SPY, and we'll see if this ends up being this trending move, counter trend move, and if we continue this overall direction right here. That's still the bias as of now, although we're getting just a few little hints of some bullishness. One of those is this buy-sell ratio. We're back to bullish with more buys and sells, essentially with a 2.7 to 1 buy to sell ratio in the database. So some internal strengthening. We'll see which ones catch up. The price goes a little bit more bullish, or if these internals actually start to switch more bearish. If we take a look at the new buy list, we've had this RMVC. Some of these, when you see these real strong moves up, be a little bit cautious on that next day, because oftentimes they will retrace back down. Keep an eye on this overbought bar where it reaches extreme up here. Then it doesn't necessarily mean that it's looking for an entire reversal. It just means that it's gone too far too fast. Kind of give it a little bit of time to work itself back into this location. This range in here is a little bit better location to be able to buy. So sometimes we miss out on some of these real big ones for a day or two or three as they can retrace back in. I wouldn't open up a new trade after 50% run up in one day. I'd wait for that to consolidate a little bit for a little higher probability trade. Nonetheless, there are still some good setups that are happening here in the markets. You've got some interesting switches here. We're still looking at consumer type stocks, and you're seeing some of those starting to move. We're starting to see some tech stocks starting to move a little bit here, so we'll keep an eye on those, and some retail. So tech and retail will be interesting to see if we end up getting that conversion back over to a little sector rotation shift. This retail, this is a decent little retail looking stock, machinery stock. That one would be interesting to look at today because of the this move to basic materials. You may see agriculture and some of these farming machinery type stocks like John Deere. They may provide some opportunity this week. If you don't have full access to the site, you can sign up with the link below. We look forward to having you. Have a great day today.